we're going to be talking about retail sales, and this fits in with Chapter 11 in Forensic Analytics. Now, usually with time series data, we compare the actual to the forecasts. If there are big differences, we can say, something has changed. We know something has changed, so what we're going to do is we're going to use 2014 to 2019 as our source data. We're going to forecast 2020, and we're going to quantify the differences. A time series is an ordered sequence of data points over equally spaced time intervals. We have these graphs all the time in publications like The Economist. The analysis extrapolates the past into the future. In a forensic accounting context, I would compare the two, and large deviations signal a change in conditions. What I want to do now is to quantify that change. Retail sales data, there's the website, www.census.gov, and the monthly retail trade report, the latest version has just been released, and this is where I'm getting my data from. Now, let's have a look at some of the history. These are three categories. So for supermarket sales in blue, we can see steady as it goes. It's up, up and away, and nice and predictable. Online in green, it's up, up and away, and we see the big peaks for December. Department store sales, unfortunately, the long-term trend is downwards. They do have a big month in December, but they're going to need more help than a big December going forward. So all I've done is I've simply graphed some of the data that I had. These are total retail sales. So we go from 2014 to 2019, 6 calendar years. This is the month-by-month total. The biggest month, always December. A sharp drop-off to January, and then an even sharper, a slightly smaller drop-off to February. The reason being, poor old February only has 28 days, so it is usually the lowest sales for the year. Over here in 2016, February wasn't less than January. February was slightly more than January, but in 2016 something strange happened. It was a leap year, and February had 29 days. We're going to be using Minitab for the analysis. You will see that the program is easy to use. So, usually we want to predict the value for future periods. I want to know whether the differences are large, and large differences should be investigated. But what we're going to do now is take a close look at retail sales. So let's say goodbye there. This is my data for the selected categories: supermarket, department store sales, and online sales. I can take this as is, 6 years worth of data, all the way up to 2019. I'm going to do a copy. Get into Minitab here, right-click, paste, and there it is. My supermarket sales for 6 years, department store totals for 6 years, online totals for 6 years. Let's do supermarket first. Statistics, time series, decomposition. I want supermarket. Let's give it a double click. There it is. It's monthly data. The seasonal length is 12. I wanted to generate forecasts, 7 of them. The graphs, I like the 4 and 1. Results, I like the summary table and results table. And it's simply okay, hardly 2 seconds. Here's the fitted trend equation. Retail sales show an average monthly increase of $108.96 million. Here are the indices. December is 5% higher than normal. It was able to fit a curve to the past data, and it did so, and there was a mean absolute percentage error of only 1%. We'll have a look at the graph and you'll see hardly a difference. That's what I want. Those are the forecasts. Here we go. The fitted data is the red, the actual data is the blue, and there is only a 1% difference on average between the red and the blue. Here are the forecasts, and what I actually want is I want the forecast here as numbers. So where's that? There we go. Copy. Let's go to Excel. Everything is ready here. So we'll do a right click and we'll do a paste. And now I need these forecasts up in here. And the way I'm going to do it is I'm going to go equals, there, enter. And now I'm going to copy this down. And now I have my forecasts and my actual. The graph is ready. Here's the graph. The blue, actual supermarket, actual supermarket sales for the 7 months to July 2020. Here we go. January and February, actual and the forecast track each other very nicely. From March to July, supermarket sales are more than expected. Supermarkets have benefited from the current conditions. Let's go back to Minitab. Okay, it's department stores next. Here we go. Statistics. Time series, decomposition. It is now department stores. There we go. Department stores, that's the code in the US Census data. Season length is 12, generate 7 forecasts, do the same as you did before. Okay, there we go. And now we can see that if this was a straight line, department store sales are decreasing by 47.62 million per month. December, 71% higher than normal. It was able to fit a function to the past data, but the mean absolute deviation up to 1.8%, so it is actually still a great percentage. Here we go. Those are the forecasts that I care about, and we can see the trend is down, and it was able to 1.8%, hardly noticeable over here. There are the forecasts. Let's go up here. Forecasts, copy. Back to Excel, and I'm going to overwrite the data here. Paste. And now I have my new forecast here, but I should not have done that. Control Z, back here. I need to do a copy, paste values. Now it keeps that where it is. Let's just go back to Minitab. Copy. We won't do that again. Paste. And now I need these numbers up there, so we will go equal there. I will copy this down, and now I will just do a copy and a paste values, and now I'm actually good to go. We can delete this here. Let's go have a look at department store sales. There's the graph. January and February, the actual, the blue, and the forecast tracking each other very closely. And here we go. The actual is the blue, like falling off a cliff, far below the forecast. July, the two come close together and about as close together as here, but in the opposite direction. The actual is still less than the forecast. So, department stores are not doing well. Let's have a look at something that is doing extremely well. X this out here. I'm now going to do online statistics, time series, decomposition, and now we want the online in there. There we go. Still 12, still 7 forecasts. Okay. Online increasing at a monthly average of 436.23 million per month. Look at this. December, 42% higher than normal. The accuracy measures, well, it fitted, but it was off by about 3%, and this could be that the explosive growth is not even. So 3%, very good. Let's look at the graph here. Online sales, there's the trend. It's up, up and away. Here are the forecasts, and online seems to be a tremendous success story. Here we go. Copy, back to Excel, paste, and now I have the data that I need here is unfortunately there. So we'll go equals, there, enter, copy this down, and just we'll do a copy, paste values, and we'll scroll down to the online graph. And the online graph is over here. Watch. Actual is the blue. Forecast, based on the past 6 years, is the orange. January, February track each other very nicely. The blue nudges ahead. And here we go, a wide diversion. The actual, much more than the expected. And remember, these forecasts are based on the past 6 years. So it's higher than what we forecast, and we forecast an increased trend, and we forecast everything being great. We forecast a 7th year based on the 6 previous years. We forecast good news, and it was even better. So now, just a reminder, this is what the data looks like when you get it. So the data is in rows like this. You have to convert it to columns, and here we go. That P is preliminary, but it's usually quite accurate. So now we're going to look at the totals. So let's go back to the Excel over here. There we go. Here I have total sales, and here I have my past data. So we'll go here. And I'm going to do copy. I have the year on the month, cumulative month, and the total sales. We'll go back into Minitab. And I'm going to go here because I forgot to paste the labels, and we can just call this total, and we can just call this cumulative, and we can just call this the date. There we go. And we should end where the other ones end. And we do. So now, we're going to X this out. We'll start fresh. Statistics, time series, decomposition, and now I want total in there. Monthly data, the seasonal length is 12. Generate forecast for 7. Now I have the total. So this is going to answer my question. Here we go. We were nudging ahead in the past 6 years at an increase of 1,427 million per month. December, 14% higher than normal. 1% mean absolute percentage error. It was able to do a good job. The past data is steady as she goes, and that upward trend is intact. Here are my forecasts. I'm going to go back up here. Forecast, where's that little arrow? Copy. Back to Excel. Here we go. And now I'm going to go, this is the total sales page. We were there before. We were there before. But now we're going to go to here. And I need the forecast in there, but I can't put it in there directly. I have to do a little paste. And I need this data in there. So we will go equals there. There we go. So have a look at this. January and February, the actual in the blue. This is the forecast. In January, February, we were nudging slightly ahead. And now we go. The actual retail sales below the forecast. Below, right on. And actual ahead of expected here. So, let's do a little calculation here. We will go actual minus the forecast. We were short 54,000 million over here. We were short there. We have a big short over here. Oops. 1, 2, there we go. It's smaller. And there we go. Right on target and above. So, the answer to our question is the actual over here is below for the 3 months. It's pretty much on target here and it's above. But the net effect is retail sales have been $206,427 million lower than expected over the period March, April, May, June, and July. So that's the answer to it. I hope you've enjoyed the video. We'll go back. Thank you for a good job, Minitab. And also, confirmed, again was Kroger. Kroger reported second quarter results, and remember what we saw there. We saw that identical sales without fuel, supermarket sales were up. And in Kroger's case, 14.6%, but we saw it for the market as a whole. This is their new guidance. For the full year 2020, we expect total identical sales without fuel to exceed 13% growth. And they expect an adjusted earnings per share growth of approximately 45 to 50%. So Kroger are doing well. So I've enjoyed this. I hope you have too. And from me to you, it's bye-bye.